On January 20, 2025, significant revelations emerged regarding Sequoia Capital China's investment strategies, particularly its substantial financial commitment to ByteDance, the parent company of TikTok. Reports indicate that Sequoia Capital China has invested over $1 billion into ByteDance, a company closely linked with the Chinese Communist Party (CCP). This investment has garnered increased scrutiny amid growing geopolitical tensions between the United States and China. Investment background: Sequoia Capital China, part of the renowned Silicon Valley venture capital firm, began its relationship with ByteDance in 2014 when the company was valued at approximately $500 million. Over the years, as ByteDance's flagship product TikTok gained worldwide popularity, the company's valuation skyrocketed to around $225 billion. The investment landscape for ByteDance is complex, with other significant U.S. investors including General Atlantic and Susquehanna, which together have also contributed to the company's rapid financial growth. Political and economic implications: the relationship between ByteDance and the Chinese government has raised alarm bells among U.S. investors and lawmakers. The U.S. Congress has taken steps to investigate the national security risks associated with TikTok, particularly regarding its potential to act as a vehicle for the CCP to influence and surveil American users. A recent bill mandating the sale of TikTok has progressed in the Senate, reflecting the increasing urgency among U.S. lawmakers to address perceived threats to national security. The Biden administration has also implemented restrictions on American investments in certain Chinese technology sectors, which complicates the landscape for firms like Sequoia Capital that have substantial stakes in Chinese companies. Some states have gone as far as to mandate the divestment of investments in Chinese firms, further pressuring U.S. investors to reassess their portfolios. Timeline of key events: 1. 2012, ByteDance is founded with early investments from firms like Susquehanna. 2. 2014, Sequoia Capital China begins investing in ByteDance. 3. 2017, General Atlantic invests in ByteDance at a valuation of $20 billion. 4. 2021, the Biden administration issues an executive order restricting new investments in critical technology sectors in China. 5. February 2024, a congressional investigation reveals that Sequoia Capital China and other firms have invested over $1 billion in ByteDance. 6. March 2024, the Senate debates a bill to force ByteDance to divest TikTok. Investor reactions: investors are keenly aware that their significant investments in ByteDance could become stranded assets. As a privately held company, ByteDance does not offer a straightforward exit strategy for investors. The prospect of an initial public offering (IPO) appears dim, particularly in light of the political scrutiny surrounding the company. Many investors are now questioning the long-term viability of their investments in Chinese technology firms, especially those with ties to the CCP. Sequoia Capital has taken steps to distance its operations from China, recently creating a new entity named Hongshan to manage its investments within the Chinese market. This move reflects the growing complexities of navigating the intertwined landscapes of politics and investment in China. Security concerns: the concerns surrounding ByteDance extend beyond mere financial implications. Reports have indicated that ByteDance has collaborated with the Chinese Ministry of Public Security to suppress dissent, raising alarms about its potential role in enabling state surveillance through its popular apps, including TikTok. Testimonies from U.S. officials, including the FBI, have highlighted the risks posed by ByteDance's access to sensitive user data across millions of devices in the United States. Conclusion: the investment by Sequoia Capital China in ByteDance surpassing $1 billion underscores the intricate interplay between venture capital, geopolitics, and national security. As U.S. lawmakers continue to scrutinize foreign investments, particularly those linked to nations viewed as strategic competitors, the future of American investments in Chinese companies remains uncertain. Investors must navigate a rapidly evolving landscape that poses significant risks and challenges, reshaping their strategies in response to the shifting realities of US-China relations. The content presents several counterintuitive points regarding Sequoia Capital China's investment in ByteDance, particularly in the context of geopolitical tensions and the implications for US investors. Here are the key counterintuitive aspects. 1. Investment in a controversial company. While U.S. investors typically prioritize national security and ethical considerations, Sequoia Capital China's significant investment in ByteDance, a company closely tied to the Chinese Communist Party's CCP, seems contradictory. This raises questions about the risk assessment frameworks used by these investors. 2. Illiquid investments. Despite ByteDance's high valuation, U.S. investors find themselves in a precarious position due to the illiquid nature of their investments. They are unable to easily sell their stakes in a company that is privately held, which is counterintuitive considering the expectation that high-value investments should yield liquidity. 3. Political backlash and investment decisions. The increasing scrutiny from U.S. lawmakers over investments in Chinese companies contrasts sharply with the previous enthusiasm for such investments. This suggests a significant shift in the investment landscape, where political risks are now undermining previously lucrative opportunities. For public sentiment and market forces, the notion that geopolitical tensions could diminish the market potential of a high-growth company like ByteDance is counterintuitive. Investors might have expected that the popularity of TikTok would insulate it from political fallout, yet the opposite appears to be true. 5. Dichotomy of relationships. U.S. investors used to view their ties with Chinese companies as beneficial for accessing a vast market. However, the deteriorating U.S.-China relationship is causing these ties to become liabilities rather than assets, contradicting the original strategic intent behind the investments. 6. Risk of state control. The fact that the Chinese government retains significant control over ByteDance, including its operational decisions, presents a risk that is often underestimated by investors. The expectation that a private investment would operate independently of state influence is challenged by ByteDance's history of collaboration with the Chinese government. 7. Investment versus ideology. The motivations behind U.S. investments in Chinese companies like ByteDance reflect a broader ideological struggle. While some investors may pursue profit, others may have ideological motivations that complicate their investment strategies, creating a paradox in the motivations for investment in a politically sensitive environment. 8. Future uncertainty. The expectation that a legislative push to divest TikTok would lead to a straightforward outcome is naive. The interplay of domestic politics, international relations, and corporate governance means that investors face an uncertain future, challenging the conventional belief that regulatory environments can be navigated with ease. These counterintuitive insights reflect the complexities and risks involved in cross-border investments, particularly when political dynamics intersect with economic interests. The report regarding Sequoia Capital China's investment of over $1 billion into ByteDance, the parent company of TikTok, reveals several key aspects that may be overlooked by many readers. Understanding these details is crucial due to their implications for global investment strategies, national security concerns, and the evolving relationship between the United States and China. Significant content overlooked. 1. Historical context of investments. The timeline of investments into ByteDance, particularly Sequoia's initial stake in 2014 when the company was valued at just $500 million, illustrates the rapid growth trajectory of ByteDance. This kind of early investment in a company that would later become a global giant is often celebrated in venture capital circles. However, it is essential to recognize the changing political landscape that now casts a shadow over such investments. The rapid valuation increase, from $500 million to $225 billion, might suggest a success story. But it also illustrates the volatility in investments tied to geopolitical tensions. 2. Political repercussions. The impending legislation in the U.S. Congress seeking to force ByteDance to divest TikTok due to national security concerns is a detail that carries significant weight. This is not just a corporate matter but a reflection of the broader geopolitical struggle between the U.S. and China. Investors may have initially seen their stake in ByteDance as a lucrative opportunity, however, the potential for legislative action against the company complicates this picture. The legislative environment could change the prospect of liquidity for these investments, leading to stranded assets as noted by experts. 3. Complexity of ownership. Many investors may underestimate the implications of owning a stake in a company like ByteDance, which is deeply intertwined with the Chinese government. The report mentions ByteDance's collaboration with the Chinese Ministry of Public Security to suppress dissent. This relationship poses ethical and reputational risks for U.S. investors who may find themselves associated with a company that operates contrary to Western democratic values. This complexity can lead to public backlash and increased scrutiny, which could further complicate investment strategies. 4. Illiquidity of investment. A significant point that might be overlooked is the illiquidity of ByteDance shares due to its private status. U.S. investors cannot easily sell their stakes as they would in a public company. This situation creates a scenario where investors are potentially locked into their positions, unable to react to shifts in the political landscape or company performance. The inability to divest easily could lead to considerable financial ramifications, especially if U.S.-China relations deteriorate further. 5. Impact of geopolitical dynamics on investment strategies. The report highlights how geopolitical dynamics can drastically alter investment strategies. The comparison made by analysts between the situation with ByteDance and previous investment scenarios such as those with Russia underscores a growing concern among investors about the risks associated with emerging markets, particularly in politically volatile regions. Investors may have to rethink their strategies, moving away from high-risk opportunities in authoritarian regimes. 6. Environmental, social and governance (ESG) considerations. The mention of ESG considerations in the context of investments in China raises an important point. As U.S. investors face pressure to align their portfolios with socially responsible investing principles, the ethical implications of investing in a company that collaborates with a government known for human rights abuses become increasingly significant. Ignoring these ESG factors could lead to reputational damage and financial loss. Significance of overlooked content. The overlooked details in this report signify a broader shift in the investment landscape where political and ethical considerations are becoming as crucial as financial returns. Investors must now navigate a complex environment that includes increased scrutiny, as U.S. lawmakers scrutinize investments in companies with ties to the Chinese government. The reputational risk for investors increases. Companies like Sequoia Capital must recognize that their investment choices are not just financial decisions but also political statements that could have long-term consequences. Need for strategic adaptation. Investors may need to develop new strategies that account for the geopolitical risks associated with their investments. This might involve diversifying portfolios away from high-risk regions or seeking investments in companies with a clear commitment to ethical practices. Long-term implications for U.S.-China relations. The investment dynamics surrounding ByteDance and TikTok could influence broader U.S.-China relations. If bipartisan consensus leads to tougher policies against Chinese tech firms, this could effectively reshape the investment landscape, limiting opportunities for U.S. investors in China. In conclusion, the investment by Sequoia Capital China into ByteDance embodies a microcosm of the larger geopolitical tensions between the U.S. and China. The significant content that is often overlooked within this narrative reveals the complexity of navigating investments in an increasingly interconnected yet polarized world. As investors grapple with these challenges, they must remain vigilant and informed about the evolving political and economic landscape to safeguard their interests. 1. Investment scale and timeline. Sequoia Capital China's investment in ByteDance exceeding $1 billion exemplifies the significant financial stakes involved, highlighting a timeline that showcases the rapid growth of ByteDance from a $500 million valuation in 2014 to an estimated $225 billion. This trajectory illustrates the company's rise as a dominant player in the tech industry, particularly through its flagship app TikTok, and underscores the lucrative but precarious nature of venture capital investments in high-growth sectors, especially in a geopolitically sensitive context. 2. Geopolitical tensions and national security concerns. The intertwining of U.S.-China relations with investments in companies like ByteDance raises critical questions about national security. Legislative actions such as proposals for ByteDance to divest TikTok due to concerns over data privacy and foreign influence reflect a growing apprehension regarding Chinese companies' ties to the Chinese government. This aspect emphasizes the risks that American investors face as political narratives evolve, impacting both the valuation and operational viability of their investments. 3. Liquidity challenges and market implications. The illiquidity of investments in private companies like ByteDance poses a significant challenge for investors. With ByteDance remaining privately held and the potential for a public listing or sale uncertain, U.S. investors find their assets stranded amidst escalating scrutiny and regulatory pressures. This situation highlights the difficulties venture capitalists encounter in managing investments in politically sensitive markets, where macroeconomic factors and regulatory environments heavily influence exit strategies. 4. The role of U.S. investors in Chinese technology growth. The involvement of prominent U.S. investment firms in funding ByteDance reflects a broader trend of American capital flowing into Chinese tech sectors. This trend has drawn criticism, particularly as these investments have contributed to the advancement of technologies deemed sensitive from a national security perspective. The ongoing scrutiny of these firms, including Sequoia Capital, underscores the complex balance investors must navigate between capitalizing on growth opportunities in China and addressing the ethical implications of their investments in the context of geopolitical conflicts. 1. The U.S. investment in Huawei Technologies Company Ltd. Huawei, a major Chinese telecommunications company, has received significant investments from various American firms over the years. Amid rising concerns regarding national security and the potential for espionage, particularly regarding the company's ties to the Chinese government, U.S. legislators have called for increased scrutiny of investments in Huawei. The company has been implicated in various espionage allegations, leading to actions from the U.S. government to restrict its operations on American soil. This situation mirrors the concerns surrounding Sequoia Capital's investment in ByteDance, as both involve significant financial stakes in companies with deep ties to the Chinese Communist Party. 2. The investment in Russia's Yandex NV. Yandex, often referred to as the Google of Russia, has attracted foreign investments from various Western venture capital firms. However, following Russia's aggressive foreign policy and its actions in Ukraine, many investors faced pressure to divest from Yandex. The geopolitical climate created significant risks for foreign investors who were drawn to the company's potential but later found their investments entangled in political controversies. Similar to the case of ByteDance, investors in Yandex had to navigate the complexities of owning stakes in companies operating under a regime with contentious international relations. 3. The fallout of investing in Venezuela's oil sector. In the early 2000s, several foreign companies invested heavily in Venezuela's oil sector, lured by the country's vast oil reserves and favorable contracts. However, as the political landscape shifted under Hugo Chavez and later Nicolas Maduro, American and European investors faced expropriation of their assets and significant losses. The deteriorating situation in Venezuela, marked by authoritarian governance and economic collapse, led to a re-evaluation of investment strategies in politically unstable regions. This mirrors the potential repercussions faced by investors in ByteDance as they grapple with the implications of investing in a company closely aligned with the Chinese government. Future outlook on Sequoia Capital China's investment in ByteDance. As we look ahead, the implications of Sequoia Capital China's substantial investment in ByteDance, particularly in light of its ties to the Chinese Communist Party's CCP and the ongoing geopolitical tensions between the US and China, raise several critical questions and forecasts. 1. Geopolitical tensions and regulatory scrutiny. The geopolitical landscape is likely to remain fraught, with US-China relations continuing to deteriorate. This tension could lead to increased regulatory scrutiny of Chinese firms operating in the US, especially those like ByteDance that are perceived as national security threats. As legislation aimed at forcing ByteDance to divest TikTok progresses, the investment environment for US firms in Chinese technology companies could become significantly more hostile. Prediction: expect further restrictions on investments. With US lawmakers pushing for more stringent controls and possibly even sanctions against firms that maintain ties with Chinese tech companies. 2. Investment liquidity challenges. Given that ByteDance is a privately held company, liquidity remains a significant challenge for its investors, including Sequoia Capital. With the potential sale of TikTok on the table, investors are in a precarious position. A forced sale could lead to a loss in valuation, while a public offering remains uncertain. Prediction: investors may face prolonged periods of illiquidity, and the path to realizing returns on their investment could be extended, leading to a re-evaluation of investment strategies in high-risk markets. 3. Market adaptation and strategic shifts. In response to regulatory pressures and geopolitical risks, investment firms may be compelled to adapt their strategies. Some may choose to divest from Chinese tech entirely, while others might seek to restructure their investments to mitigate risk. Prediction: a trend towards diversification away from Chinese investments may emerge, with firms reallocating capital to markets perceived as less risky or more politically stable. 4. Continued popularity of TikTok and global expansion. Despite the challenges, TikTok's global popularity remains a double-edged sword for ByteDance. The app has become a cultural phenomenon, particularly among younger demographics. As long as it retains its user base, ByteDance may continue to thrive operationally, which could offset some investor concerns. Prediction: ByteDance will likely focus on expanding its user engagement and monetization strategies globally, potentially leading to increased revenues that could stabilize the company amid regulatory challenges. 5. Technological and competitive landscape. The competitive landscape in social media and digital entertainment is evolving rapidly. New platforms and technologies are emerging, and ByteDance must continuously innovate to maintain its market position. Prediction: ByteDance may invest heavily in research and development to enhance its offerings and fend off competition, which could require substantial capital and affect profitability in the short term. 6. Pressure for transparency and ethical governance. There is mounting pressure on technology companies, especially those with ties to authoritarian regimes, to adopt more transparent and ethical governance practices. This scrutiny may lead to calls for ByteDance to implement changes to its operational and data governance frameworks. Prediction: ByteDance may face demands for improved transparency in its dealings and operations, particularly concerning user data handling and its relationship with the CCP, which could influence its market strategies. 7. Long-term impacts on U.S. investment strategies. The situation with ByteDance could have broader implications for U.S. investment strategies regarding China and other authoritarian regimes. The investment community may develop frameworks to assess the risks associated with such investments more rigorously. Prediction: a shift in the investment paradigm could emerge, with firms adopting more cautious approaches to investing in foreign companies that might be perceived as politically risky. Conclusion: Sequoia Capital China's investment in ByteDance represents a complex intersection of finance, technology, and geopolitics. The future outlook is fraught with uncertainty shaped by evolving regulations, market dynamics, and international relations. As the political landscape continues to shift, investors will need to navigate these challenges carefully. Considering both the potential rewards and the inherent risks of their investments in Chinese technology firms like ByteDance, the next few years will be pivotal in determining the long-term viability of these investments and the broader implications for U.S.-China relations in the tech sector.